All right, I think it's time we start the session now. And today's session will be about decoding GST amendments in the Union Budget 2023. Union Budget 2023 has been the talk of the town, and there have been many amendments that have been brought to the GST law. And who better than Bimal Jain to explain and also make it more simpler for all of you to understand? So today's session will be about the burning topic of decoding GST amendments, and thank you all for taking the time out and joining us this weekend. And I know most of you might know Bimalji, but here's a quick intro of Bimalji for those of you who would like to know more about him. He's a member of Institute of Chartered Accountants of India since May 1994 and member of Institute of Company Secretaries of India since December 2006, along with a bachelor's degree in law. He is a qualified SAP and financial control consultant and has more than 21 years of experience in indirect taxation and specializes in all aspects of GST, service tax, VAT, CST, central excise, customs, FTP, SEZ, EOU, and export import laws. He has working experience of more than 18 years in renowned companies like LG Electronics India, Honda Motorcycle and Scooters, Hindustan Development Corporation, Khaitan and Company, and presently he is the executive director of A to Z Taxcorp LLP, a boutique indirect tax firm. And in addition to that, he has also won a lot of awards and recognitions. He's been the keynote speaker at the Guinness World Record made by ICSI in the largest taxation lesson on GST, attended by 4,500 plus participants, breaking earlier record of Japan. Business Leader Award from Amity School, Noida. Best Speaker Award from NARC ICAI/ICWAI. Young Achievers Award at Igniting Minds 2015. Best Participant Award in MSOP 117th batch by ICSI. Now over to you, Bimalji, to take the session forward.
Thank you, Harsini, and thanks for a lovely introduction in the morning today. Thanking all the participants, being Sunday, you have joined this webinar. That shows that your love and affection for me. That being Sunday, you are having your family commitment, but still you're taking out your time and watching this live webinar. And I always say live webinar is most interesting one, and where we learn a lot, we interact together, we get connectivity of talking to each other, and that is the best part of live webinar. So thanking once again from my core of my heart that you are taking out your time joining on Sunday, and rest assured your joining today will be enriching to you. That is my commitment to all of you, my commitment. And if you are really watching this live webinar, taking out your time, compromising, sacrificing your Sunday, I will make it live for all of you. And I am going to discuss today, of course, decoding of GST changes in Union Budget 23, Finance Bill 23. I'm going to discuss personal income tax also, old versus new tax regime. And I'm going to touch base some of the important recommendation as made in 49th GST Council meeting held yesterday, 18th of February. So I will mix it up and make it live for each one of you. Bylaws are same, rules are same, that you must use your chat box, relax, enjoy like you are sitting on an aircraft traveling from Kolkata to Delhi or Delhi to Kolkata. Have a cup of tea or coffee in your hands, a paper and pen if required. Relax and enjoy. And I can tell you that you need not require to look at technical provision, but definitely I will make it live, easy for all of you. So are you all ready? Please tell me, are you all ready? If ready, say yes in a chat box so that I can get it start right away. Okay, lot of yes, and thanking each one of you. I'm not naming, but you all are individually for me very important because you're taking our time joining today on this Joho Books webinar, important one as a hand-holding to the trade members, tax professional, chartered accountant, cost accountant, company secretary, and lawyers, everyone. Very good. So Ashutosh is writing little more. It was so interesting. So Ashutosh, when you have written a big sentence, I read it. Abhishek also read something like that. So nevertheless, appreciating each one of you. Let's start, and one by one. The first, you should know that there are changes in GST law, right? Clause number 128 to clause number 144. And I'm going to discuss each of the clause one by one. You just take down the pointers and background material if needed. Then, of course, I will pass on to Harsini, and Joho Books would be mailing to each one of you who are joining today. So you will get through a mail all background material. So get set, ready. First change. There would be facilitation for composition dealer. Composition dealer, you know, with the threshold of 1 crore rupees, they would be allowed to make intra-state supply of goods, intra-state through e-commerce operator. So until adjourn date, it was not permitted. Now law is getting amended, and such composition dealer would be allowed to make intra-state supply of goods through e-commerce operator. But this is yet to be started. An expected date which is being conveyed 1st October 2023. 1st October 2023. So this is the first change. Come to the second change, and you must use your chat box, right? So that you should also, participating in this webinar, and when you're responding in a chat box, it helps you to digest the provision. Whether right or wrong, do not bother about. If it is going wrong, I'm here to support you. Sabka saath, sabka vikas. So you must try out to responding back in a chat box. That's important. Second change. They change proposed in second proviso and third proviso of section 16, subsection 2 of CGST Act. Before discussing this, let me create background. I will not be discussing only changes. I will give you some flavor, good flavor of a subject matter. In GST, let's say I'm a supplier and you all are my buyer, recipient. If I'm a chartered accountant, assume I'm a chartered accountant. My turnover is only 30 lakh rupees. I need to take registration. I've taken registration. Now I'm raising invoice for 5 lakh rupees from Delhi to Tamil Nadu, interstate IGST, and you all are my customer, recipient. When I'm raising my invoice, what we have seen normally in the trade, that my customer delay in making payment of value of supply and the tax thereon. So 5 lakh plus 18% IGST. And we have seen time lag of 2 months, 3 months, 6 months, 9 months. And for chartered accountant, it is known fact that we are being paid professional fees of last year when we are undertaking this year assignment. That's what the delay we have seen in the trade. So I'm going to give you some questions. You should be ready. Bimal Jain being supplier raising invoice 5 lakh plus 18% IGST, which you haven't paid to me. You haven't paid anything to me. Do I require to deposit GST? Because in the pre-GST era, there was threshold of 50 lakh rupees and service tax was supposed to be deposited only on receipt basis. But GST is on accrual basis, right? Perfect. Lot of you are answering yes. Perfectly said. If I don't pay, just assume if I don't pay, then what happened? There would be delayed payment of GST. There would be interest applicable, right? As per section 50, subsection 1. What is the rate of interest? 18% or 24%, right? 18 or 24, whatever you like, 18%. Perfect. Now, in this given situation, I have submitted my representation, and my humble submission to the government would be, sometime when we are filing refund claim to the government, to the department, and there's a delay, right? Sometime there's a delay from their part. First, you tell me what is the time limit for refunding back, giving the refund claim to the taxpayer, 60 days or 90 days? Write down that. I want to see that answer coming in a chat box. It is 60 days. If they delay in refunding, allowing the refund claim to the taxpayer, whether I'm entitled to get any interest, please tell me, am I entitled to get any interest? Yes. Beyond 60 days, they are supposed to give me the interest as per section 56 subsection 1. What is the rate of interest department will pay to me in case they delay? It is 6%, 9%, 12%, 18%. It is only 6%. 6%. So my humble submission, when taxpayer delays, rate of interest is 18%. And when department delays, rate of interest is 6%. This is not at parity. This is not at parity, first of all. Second, we have seen a lot of refund claim are not coming on time. And interest does not come automatic. Does not come automatic. Second component. And third component, being SME, micro, small enterprises, 30 lakh rupees, chartered accountant, right? My turnover. I'm not having enough cash. And I'm not being paid by my customer, by my client. And if I delay, I have to pay 18% per annum rate of interest, which is calculated pro rata on the basis of days delayed. Now, problem with the micro and small would be, first, I'm not being paid. Second, if I delay, 18% rate of interest is not conducive. It is not easing our business. This rate of interest need to be looked into. What happened in such case if I'm not having a working capital? I need to take a loan, right? At 12% or 10% and pay the GST liability. That is not the real perspective, right? That is not the real perspective. Am I right or wrong? Say yes and no in a chat box. Say yes and no in chat box. Yes, that is what the situation all about as on date. So that's my answer. So Mukesh Tekriwal saying yes. All right, yes. Now there is a change in Finance Bill 2023. They are saying under section 56 subsection 1, they will prescribe the manner with certain condition and restriction for calculation of delay in period by the department while allowing the refund claim. So they are saying they are going to issue a clarification manner with certain condition and restriction. 60 days is the criteria in their hand, but normally we have seen once refund application RFD 01 is being filed, they issue deficiency memo. We again resubmit our refund claim. Then again we get deficiency memo. We again resubmit rather our refund claim. And we have seen in deficiency memo, and it is worth noticing that department must note, they're demanding documentation which is available with them, which is available on GST and Common Portal. And in that regard, we get deficiency memo. Now they're saying they will exclude such time period, looks like to me. They will exclude such time period unless the final refund claim accepted. The delay of 60 days would be calculated only from date and onwards finally accepted refund claim. That's what looks like to me. This is the change they have suggested under section 56 subsection 1. Now taking this discussion a step further. Bimal Jain being supplier pay GST liability on accrual basis. You as a buyer, you as a recipient, you as a client, who have not paid the amount to me. You have not paid amount to me. Value of supply plus IGST. Can you avail credit without payment? Say yes and no in a chat box. Yes and no in a chat box. Yes, you can avail credit. You can avail credit. Now, second proviso and third proviso. If recipient, buyer, my client fails to pay, please note this line. I'm stressing this line, fails to pay within 180 days, 180 days from date of issuance of invoice, then whatever credit you have taken, you need to reverse, which is as good as payment, along with interest. That is what the change proposed. Now here there are 2-3 questions, then I will resolve those queries as well. First, you answer my all these questions. Let's say I raise the invoice for 5 lakh plus IGST, but you have paid part payment to me. Let's say 2,50,000 and corresponding IGST. So you need to reverse only part, pro rata, or full reversal. Say part or full reversal. So write down in a chat box part or full. It would be part. Only to the extent of 2,50,000 plus IGST you haven't paid. That you need to reverse. Perfect. Okay. Second, let's say if it is RCM liability, reverse charge method, wherein you as a recipient will pay the GST. Whether this provision, second proviso, third proviso of section 16, subsection 2 applicable? Please tell me yes and no. Not applicable. Not applicable. Third case, let's say it is schedule 1 transaction. Schedule 1, 4 transaction without consideration, deemed supply. So let's say I'm a factory in Delhi and you are having my branch in Chennai, my own branch, and the same PAN number. And I've stock transferred the goods without consideration. Deemed supply, GST leviable. But whether this second proviso and third proviso of section 16, subsection 2 for reversal is applicable or not? Say yes and no. Not required. Not applicable. Fourth case. We are having ARAP transaction. ARAP means I have raised the invoice for 5 lakh rupees to you. You have to pay me 5 lakh plus IGST. But there is a case that you have also supplied something to me and raised the invoice for 2,50,000 and charge IGST. So only 2,50,000 is net amount, which is I need to receive from you. So you haven't paid anything, but you're supposed to get 2,50,000 from me. So when you need to reverse credit, it would be part or full. Tell me, part or full? Pro rata or full? Part, pro rata. Perfect. Last transaction. Here you should apply your mind, right? There is provision section 15, subsection 2, clause B of CGST Act. Supplier is liable, but incurred by the recipient. So I'm creating one example so that all of you can digest and capture. And there will be, this is the interplay of this provision with the valuation provision with GST input tax credit provision. So listen very carefully. Interesting one. Let's say you are all my client, Reliance Industries Limited. You gave me a contract for 100 crore for construction of hotel and mall. For construction of hotel, mall, factory, office, whatever. It is construction of immovable property, 100 crore. Being supplier, it is my wholesome contract, including material and labor. But when I started this contract, you as a client thought Bimal as a supplier will not use quality material. So what you did as a recipient, you purchased iron and steel and cement from the market. So you purchase cement and iron steel from the market. So supplier has raised the invoice to the client, Reliance Industries Limited. And you have given me that cement and iron steel worth 50 crore, FOC, free of cost, you have given to me. Now, there are certain questions which you need to reply slowly and slowly. When you purchase as a buyer, as a client, Reliance Industries Limited, purchase cement and iron steel, supplier charge GST, can you take credit? Say yes and no in a chat box. Can you take credit? Yes and no. You can't take credit. So those who are answering no, they are right. Section 17, subsection 5, clause D, negative list. You can't take credit. Second question. Now, Bimal Jain being contractor, works contractor, will raise invoice to you, right? Contract was 100 crore rupees, but you gave me 50 crore rupees FOC cement and iron steel. I'm supposed to get only 50 crore, but when I'm raising invoice to you, whether I would be raising invoice for 100 crore or 50 crore, because there's a valuation provision, and I referred section 15, subsection 2, clause B. So Bimal Jain being supplier raising invoice on 50 or 100 crore, it would be 100 crore rupees. 100 crore rupees. I would be charging GST, right? If I'm charging GST, can you take credit? Please tell me yes and no. As a buyer, can you take credit? Say yes and no in a chat box. You can't take. Section 17, subsection 5, clause C. You can't take credit. And this matter is sub judice before Honorable Supreme Court in the case of safari retreats. So we have understood the provision, but I was discussing with a reference to second proviso and third proviso of section 16, subsection 2. I have raised the invoice for 100 crore because of valuation provision, but you will pay me only 50 crore because that is only the net amount which I'm supposed to get. So worth 50 crore which you're not paying. Let's assume whether this credit was available. Let's assume hypothetically of which you have taken credit. Now, since you have not paid 50 crore to me, do you require to reverse as per second proviso and third proviso of section 16, subsection 2? Please tell me yes and no in chat box. Yes and no. Do you require to reverse? Please say in a chat box. Okay, so a lot of you, yes and no, and answer H, no reversal. No reversal, not required. This is as good as you paid because it is your FOC supplies to me, right? And as good as paid, no reversal would be required. Am I clear to all of you? First of all, this provision must be clear to all of you. Okay. Having said that, there are two questions which I'm raising, and we are raising before the board, CBIC, and we want to have clarification. We have availed the credit, which you would be reversing if you fails to pay within 180 days from date of invoice, understandable. But you have not utilized this credit. It was only availed, and you are having enough credit which you have not utilized at all. Whether interest is applicable or not, first point, because provisions say reversal of credit along with interest, but you have not utilized the same. Whether reversal would be okay. So a lot of you are answering, and to my mind, section 50 is very, very clear. Wrongly availed credit but not utilized. Wrongly availed credit but not utilized, no interest. If it is utilized, then only interest is leviable. Am I clear to all of you? Please tell me yes and no in the chat box so that this part is clear. Say yes. All right, perfect. So yes. Come to the next change. Third one, interesting one. You know there's a Schedule 3 in GST law. And Schedule 3 talks about neither a supply of goods nor supply of services. Para 7 and Para 8, there are 3 transactions involved. Para 7 talks about merchant trading. And for giving you clarity, what is merchant trading? Let's say I'm registered in Delhi. I got a contract from a US customer for supply of goods. So what I can do, I can supply from India. And another option, no, I got my vendor, supplier in Korea. And I asked my vendor and supplier from Korea to supply directly to my customer at US. So Korea to US. This is called merchant trading, third country. You have to answer one by one. In my PL account, profit and loss account, there would be, let's say, $100 for my purchase from Korea customer, Korea supplier, Korea vendor, $100 on my debit side of PL account. Please tell me whether basic custom duty, including IGST, is leviable. Treating the same as an import of goods, say yes and no in a chat box. Yes and no in a chat box. Not. Because goods are not entering in custom frontier of India. So no basic custom duty, no IGST. There's $120 which I got from my US customer coming on credit side of my PL account. Tell me whether any GST leviable. Say yes and no, because this is my revenue. Whether GST leviable, and answer is big no. No GST. Similarly, if I undertake Para 8A, when goods are being imported and stored in custom bonded warehouse, so I file my bill of entry in bond. When goods are stored in custom bonded warehouse, I'm selling to some other customer, let's assume, but it is within custom bonded warehouse. Whether GST leviable, Para 8A, please tell me yes and no. So you have to really, yes, not applicable. High seas sale, when I imported and goods were on high seas, I sold such goods. Whether GST leviable, not leviable. So these 3 transactions, Para 7 and Para 8, amended in Schedule 3 from 1st February 2019. What department started? Department started disputing the transaction prior to 1st February 2019. And they started saying, since this amendment has come in Schedule 3 from 1st February 2019, so prior to that, GST leviable. And to my number of clients, they have issued so-called notice. Even the adjudication has gone against me. I keep on telling them, sir, no GST leviable. And this explanation, this amendment, though it was not retrospective when it was done earlier, but meaning no GST leviable, neither a supply of goods nor supply of services. But they were not hearing anything. But now this change is retrospectively made from July 1, 2017. Well part. So no GST on these 3 transactions from July 1, 2017. Well said. Second component of this transaction. There are 2 kind of taxpayer category. One taxpayer is a genuine and honest taxpayer. They do not want to get into litigation. So maybe a case this genuine and honest taxpayer has got so-called notice and paid the GST also. It was not leviable, but he has paid the GST prior to 1st February 2019. And there's another category who has not paid and he has litigated the matter. He's saying, I will not pay you the GST, and litigated the matter for the transaction done prior to 1st February 2019. Now we have seen in GST, the person who is litigating or delaying the process, they get advantage. What they are saying in this amendment now, the person who has paid the GST will not be refunded. Will not be refunded. This transaction, it is not chargeable to GST. How you can take this money? That Article 265 to the Constitution of India. Government can't collect without authority of law, which was not leviable. If he has wrongly paid, it must be refunded. Can you make provision that it will not be refunded? To my mind, it is subjective, and we can definitely file a writ petition only on one ground, without authority of law. Hope I'm clear to all of you. Say yes in a chat box. Say yes in a chat box that you got at this point. Now, one change which has come in GST credit pertaining to this transaction. Section 17, subsection 3. Now this, I've told you that these three transactions of $120 coming on credit side of your PL account, right? Credit side of your PL account. No GST leviable. But question was, if I'm having common ITC, which is pertaining to taxable supplies and pertaining to these three transactions, maybe rent, maybe mobile, maybe telephone. So common ITC. Do you require to reverse common ITC in terms of Rule 42 and Rule 43? Pertaining to these three transactions, do you require to reverse? Say yes and no in a chat box. It was not required to be reversed. Not required to be reversed. But in the Finance Bill 2023, they have amended 17 subsection 3. Value of exempt supplies need not require to include Schedule 3 transaction except Para 5, sale of land and building. This was the provision. But now what is the amendment proposed? They are saying Para 8A of Schedule 3. Supply of goods in custom bonded warehouse even before home clearance will be included in that value of exempt supply, and you need to do pro rata proportionate reversal in terms of Rule 42 and Rule 43. So meaning thereby, henceforth, whenever this provision get notified, so let's assume, I'm assuming a date that 1st January 24, it is getting notified. So reversal to be done pertaining to Para 8A, supply of goods within custom bonded warehouse before home clearance. You need to reverse common ITC. So this is the new change which was not there. But the problem lies here. And I've made this point, represented this point to the government. I asked them, sir, please tell me whether this provision, Kuljeet Jhala is saying, sir, please repeat, Kuljeet's time is paused. There are lot many changes. This video would be available later. So in case something which you have missed, so when you are really taking a cup of tea or coffee, please focus on me. My humble request, don't ask me for repeat, but otherwise it will take away the time. This video would be available, but please join back to back with me, whatever I'm saying. I'm saying that from 1st January 24, if that is the date of notification, reversal would be required, pro rata reversal of common ITC pertaining to this para 8A. That is what I said. But the problem is, if I have done some transaction after 1st February 2019, I have treated Schedule 3 transaction neither a supply of goods nor supply of services and not paid the GST. Until then, there was no reversal of common ITC provision pertaining to these para 7 and para 8. Now let's say from 1st January 24, this reversal pro rata of common ITC would be required. Whether this is applicable retrospectively for the past period transaction or applicable only prospective from 1st January 2024 onwards. Please tell me, retrospective or prospective? To my mind, always prospective, always prospective. And this provision is not saying anything about retrospective, and anything which is restricting, please, that will always be prospectively applicable unless it is worded retrospective applicable, and that is subject to challenge before the court. But I'm saying it is prospectively applicable. Am I clear to all? Say yes in a chat box, so this part would be over. Say yes in a chat box. Perfect. So many of you, very good. I'm thankful to all of you that all of you are responding so quickly and so promptly. Next, there's another change. Negative list for GST credit, block credit, as I discussed for construction of immovable property, even though you're going to use in the course of furtherance of business, but credit is not available. Another boiling point was corporate social responsibility as defined under Section 135 of Companies Act 2013. Corporate social responsibility is statutory obligation. And it is, of course, I'm incurring for continuation in the course of furtherance of business. And dispute was whether credit is available or not available pertaining to goods or services used for corporate social responsibility, whether credit is available or not available. Under Income Tax Act, under Section 37, no deduction for corporate social responsibility. But under GST law, there was nothing prescribed and there was no bar, no restriction. Now this new section, subsection you may say, is inserted. Section 17, subsection 5, clause FA. They are saying any goods or services for CSR, no credit is going to be available. So now I can say law is being made. I know that is statutory obligation in the course of furtherance of business. I know that, but now when law is made, credit is not available, But question remains whether this provision is applicable prospectively or retrospectively, because this is the provision prospective. Nothing worded like retrospective, Prospectively applicable. Let's say gets notified from 1st January 24. Let's assume. So whether this restriction, this bar is going to be applicable prospectively or retrospectively, please write in a chat box. Of course, prospectively. Of course, because any restriction by subtle jurisprudence by Honorable Supreme Court in the case of Martin Lottery clearly said that any restrictive provision cannot be applied retrospectively. So to me, it is prospectively applicable, and all of you have given a right answer. So this is the CSR. Come to the next change. In GST law, we know that for registration, threshold was 20 lakh, 40 lakh for intra-state supply of goods. This is the threshold for registration under section 22. Under section 24, there is no threshold. If RCM applicable, let's say I'm a supplier and you are my buyer, RCM applicable, and your turnover is less than 20 lakh rupees, less than 20 lakh rupees, you have not taken any registration. But if RCM applicable, there was compulsory registration as per section 24, right? And in between 22 and 24, there was one section 23. And this is good change, good amendment, laudable amendment. Section 23, subsection 1. Now it is in retrospectively substituted, starting with the non-obstante clause. Notwithstanding anything contained in section 22, subsection 1, threshold amount for registration, or section 24. So overriding both these section 22, subsection 1 and 24. And saying if you are exclusively, please bear in your mind, exclusively engage in non-taxable supplies, non-taxable supplies. So supply of goods or services not chargeable to GST. Or exempted supply. So exempted either nil rated or exempted by way of exemption notification, like for goods 2/2017, for services 12/2017. Agriculturist, if you're engaged exclusively non-taxable supplies or exempted supplies. If there's some RCM on you, let's assume, because of 24, you need not require to take registration. And that too, July 1, 2017. If you have taken registration for these purposes, then you're free. You can always now go and surrender your registration. You first tell me in a chat box you understood this part. Say yes in a chat box. Now this part is clear. Please tell me. This part is clear. Say yes in a chat box that this part is clear. There's another provision within this provision, which is by way of notification, that GST Council may recommend in some of the specific cases that you need not require to take registration. So I'm creating one example for you to discuss that notification. I'm a supplier, let's say GTA. I'm a GTA supplier. And I have not opted for 12% GST rate. It is only 5%, and that too RCM, exclusively RCM. So whatever I'm providing my services subject to RCM in the hands of my recipient. So my total supply is under RCM. Do Bimal Jain as a supplier GTA need to take registration? Say yes and no in a chat box. Yes and no in a chat box. Not required. There is specific notification 5/2017, Central Tax. Need not required. Srinivas Gobind. Need not required. So being supplier GTA, if my whole supply under RCM, need not required. Am I clear to all of you? So this was the next change. Perfect. So my whole team, my whole participants are very well now connected with me. Perfect. Now, the next change. Next change. I'm going to discuss now 4 important changes of this Union Budget 23 and some of the changes of Finance Bill 2022. And clearly you need to understand. So Himanshu Shah is helping me with all section, subsection, everything he's trying to write down in a chat box. Not an issue, but bear with me and go with me. I hope you all are enjoying. This is the important one, right? So go along with me right there. Tejas, you're putting so big comment in a chat box. Let me first finish my presentation, dear. Allow me to finish my presentation. Of course, whatever query which you wanted to ask from me, I will definitely answer in question answers box. So Tejas, go with me. So a lot of you are so good, but still. Okay, so Mayur Badani, go along with me. Next one. I'm going to discuss now the changes last year budget, Finance Bill 2022 and Finance Bill 2023, mix, interplay, so that you can understand. For discussing this, let me create this example. We have seen that in GST law, there was two-way communication, supplier and recipient. And our ITC matching, mismatching was driven accordingly by section 37, 38, 39, 42, 43, 43A. But we all know that this two-way communication is being stopped. There's no two-way communication. There are certain changes brought in Finance Bill 2022, which is now the part of provision of the Act, and certain changes made this year budget also, which is talking about sequential filing of GST return, and thereby the credit which my buyer and recipient want to avail is dependent on the supplier. So your supplier should be tax compliant now. You have no choice. Your supplier need to be tax compliant. And like banking sector, we have known the concept, know your customer. In GST, it is being envisaged that you should know your supplier. So we have seen in the past the challenges. If your supplier wrongly furnishing GST number of the buyer, showing B2B supply as a B2C, it is interstate supply, but wrongly furnished as an intra-state. Maybe supplier has paid the taxes through 3B, but did not file GSTR1. You were not getting credit because it was not getting auto-populated in your GSTR 2A or 2B. In case of interstate supply shown as intrastate, it was coming but showing as ineligible. So this credit was not coming in your 2A, 2B. And it is being disputed by the department. From 1st January 2022, the fifth condition, there were earlier 4 conditions for availing credit. You should have tax invoice. You must have received goods and services. Your supplier must have paid taxes. And being buyer, you are regularly filing GST return. Fifth condition got introduced only from 1st January 2022, and which is the credit which you have availed in 3B must be matched with GSTR 2B. So if your supplier default or wrongly furnished incorrectly in his GSTR1, then that is not going to be auto-populated in GSTR 2B. Hence, credit will not be available to you from 1st January 2022 onwards. Second, and which you must take a note of it, that if there's a wrong filing of GSTR1 by the supplier, it will create a problem for you. But from 1st January 2022, no choice in your hands. You need to look at tax compliant supplier. You can't help it. It is a part of provision now. Second challenge which I've seen in the trade, that supplier used to file GSTR1 and 3B. So while filing GSTR1, and let's assume his liability was 1 lakh rupees, but wrongly furnished for 10 lakh rupees. Extra zero got added. Wrongly furnished, GSTR1. Clerical error, human error. But definitely this supplier will pay only 1 lakh through GSTR 3B. He will not pay 10 lakh rupees. So there would be mismatch. 1, 10 lakh rupees liability, 3B, 1 lakh rupees. Mismatch. So corresponding change is being made under section 75 subsection 12, and by way of explanation it is being stated it is going to be self-assessment tax, and that can be recovered by the department even without issuance of so-called notice under section 73 and 74. So such a condition is being prescribed. Here we can have to say there were certain supplier doing the wrong part, either intentionally just to pass on the credit to the buyer, to the recipient. The liability was 1 lakh, but wrongly, intentionally, they were showing 10 lakh rupees and passing on the credit, but paying only 1 lakh rupees. There are certain taxpayer doing intentionally, but certain taxpayer genuine error, human error, clerical error. Can it be self-assessment tax? But law is being made, it is self-assessment tax, can be recovered even without issuance of so-called notice. Now, government has made certain changes in last year budget and this year budget. I'm going to discuss these provisions, which is paving way for sequential filing, one-way communication, unilateral. If your supplier is tax compliant, then only you will get the credit. And that is, I'm telling you, in time to come, 6 months to 12 months, I'm telling you. You as a buyer and recipient was struggling because of supplier, because your supplier was making mistake. And there was no automated GST return system. But this is going to be strengthened and streamlined in time to come, 6 months to 12 months, and listen those provisions. And you have to now answer in a chat box. Rule 59 sub rule 6, applicable from 1st January 2022. Let's say I am supposed to file my GSTR1 for the month of February. If I have not filed 3B till January, can I file GSTR1 for February month? Say yes and no in a chat box. Possible, doable. Can I do that? I can't do that. I can't do that. So the problem going to be solved that this supplier will always be making tax payment, 3B. Then only he can file GSTR1 for the month of February. Coming to the second component, if the supplier is making mistake, GSTR1 versus GSTR3B, difference of 9 lakh rupees. Can he do that? Can he continue to do such mistake? Once or twice possible. But if he's regularly doing, then self-assessment tax. Recovery without issuance of so-called notice. So he can have clerical error once or twice, but not regular. So this mismatch will be diluted, reduced over a period of time. Second, coming to section 37, last year change, this year change. If I want to file GSTR1 for the month of February, but I have not filed my GSTR1 till January, can I file GSTR1 for February unless I file GSTR1 till February? Can I do that? Not possible. Not possible. Not possible. So he is compulsorily going to file one, so as getting auto-populated in 2A or 2B. And he has to make payment of taxes as I discussed just a while ago. So this will get strengthened. The change in budget 23, if the supplier has delayed filing GSTR1, then time limit is being prescribed. For delayed filing is now 3 years, maximum 3 years. this person can file his GSTR1 beyond 3 years, he will not be permitted. Come to section 39, GSTR3B. Now I need to file my 3B for the month of February. Can I file 3B without filing GSTR1 for the month of February? Possible or not possible? Say yes and no, possible or not possible? Not possible. I need to file GSTR1 for February, then only my 3B get enabled. 3B get enabled, otherwise not possible. And this year budget change, 3 years time limit for all 3B to be filed. So there will not be the enable provision, but there's a 3 years maximum time limit. And similar 3 years time limit prescribed for 9 and 9A and GSTR 8, which is TCS, electric e-commerce operator, section 52. So with these process, with these provision, wholesome, connecting with each other, there would be unilateral from supplier side, and you need to take credit only when you're having tax compliant supplier. Hope I'm clear to all of you. Say yes in a chat box that this part is clear to all of you. Perfect. So well done. So this part is again over. Very well done. Thank you very much. Okay. Next part. Section 54, subsection 6, refund provision. There's a 90% provision, right? 90% provisional refund granted by the GST officer. Earlier, there was a reference that this refund amount can include provisional credit. Now the provisional credit concept is gone, so they have omitted this provisional credit reference within the refund amount, of which 90% can be granted by the GST officer. This is the only change under section 54, subsection 6. Coming to section 122, a new subsection got inserted. Now there's a penalty prescribed for the e-commerce operator for his non-compliances of any provision of GST law or rules made thereunder. Now this e-commerce operator is going to be allowed that he will allow composition dealer to make intra-state supply of goods through his e-platform. So if there is non-compliances, even the unregistered supplier can also supply goods through this e-commerce operator. So if there is non-compliances on the part of e-commerce operator, then there would be penalty under 122(1)(b), and that is not peanut. Sushil Barma ji, not peanut. 20,000 or amount of tax evaded. Please, whichever is higher. Sushil ji, आपने 10,000 and peanut लिखा एक आपने you made some emojis also. Please don't do that, because when you're writing a wrong answer, somebody get misled. But that is how the provision all about. Okay, now there are 2-3 more changes in GST, and then I will come to the personal income tax. First time you're going to hear me on income tax also. So let's carry on. Maximum 20 minutes, and then question answer session. So next change is under section 132. 132, you know, there are 12 specified offences liable for prosecution. Prosecution means arrest provision. If amount of tax evaded or wrongly availed credit or utilized or erroneous refund is less than 5 crore, then bailable offense. More than 5 crore, non-bailable offense. But what they have done, listen very carefully. They have raised the minimum threshold amount for launching prosecution provision of these offences, 12 offences, from 1 crore to 2 crore. It's a tax amount I'm referring to, except issuance of invoice without supply of goods or services, which is called fake invoice. So crux is, this minimum threshold is increased from 1 crore to 2 crore for all 11 offences. But for one offence, fake invoice, it will continue to be 1 crore rupees. 3 offences out of 12 offences are decriminalized. Decriminalized. So no more launching of prosecution provision. 132 subsection 1 clause G, J, K. What are these 3 offences? When you stop or create obstruction for performance of duties by GST officer, or when there is deliberately tampering of evidences by the taxpayer, or as a taxpayer when you fail to supply information, these 3 offences out of 12 are being taken out, decriminalized. No more launching of prosecution provision. Section 138, compounding of offences. Have you heard of compounding in GST? Please tell me in the chat box. Let me see. Anyone have heard compounding of offences in GST? Jitesh, you are the only person. Oh, Mahesh is another person. Oh, great. See, they may have heard compounding provision, but I'm sure they are not having any case study or real case in their hand that they got it compounded. Compounded. Now listen very carefully. Why somebody was not compounding? Why not going for compounding under section 138 region was, if I'm having 100 rupees liability, then it can be 50% to 150%. So it can be minimum 50 and maximum would be 150. And commissioner, normally we have seen, will try to fix it up on a higher side. This existing range of 50% to 150% going to be reduced now 25% to 100%. At least looks lucrative now. Second, for that fake invoice, you can't be compounded. It can't be compounded. And for 3 offences decriminalized, when decriminalized, there is no question of compounding. That is the change they have made under section 138. So well done. It is a step towards easing up business. We will look more and more. So this is the next provision. Am I clear to all? Am I clear to all? Say yes in the chat box quickly so that I can move further. Perfect. All right. All right. Another change, that there would be consent by the taxpayer, that when you are filing your registration application, return 1, 3B, 9, etc., that you're permitting to the common portal, GST common portal, or when you're raising e-invoice or generating eBay bill, you're sharing all data on portal, right? It can be shared among the other portal as well. So you're giving authority, deemed authority, consent, so that tomorrow you should not litigate that why my data is being shared. And they are safeguarding themselves from legal remedy also if sometimes something goes wrong, which is what I'm assuming, that you have given deemed consent. That is what the new subsection got introduced. Coming to the 2 more change, and then we will through with the GST changes. They have amended the definition of that your non-registered online recipient and definition of OIDAR. So with this amendment, they wanted to expand the tax base. They want to include a lot more transaction. just for your understanding why this definition got changed. And you have to answer me. When you are importing something, let's say something which coming back to you as a OIDAR, and you're in India, you're registered in India, then RCM applicable or not applicable? Say yes and no in a chat box. Applicable or not applicable? Say yes and no in a chat box. Please, applicable, right? Only challenge was when you are non-registered online recipient. You were not registered. Then when you're not registered, then the question was, how come there are so many individuals nowadays downloading music, movie, books, so many things, taking tuition classes, so many things. So this was untapped area in the hands of government, which they have opened up now. What they will do, they will now put condition on such foreign supplier providing online information database access retrieval service when given to the non-registered online recipient to appoint some representative in India. And then these transactions would be captured for the GST applicability. We are digitalization. So many transactions online, and that is how they are going to capture this transaction. So last change, and I will touch base interplay with the 49 GST Council meeting also. See some change which has come in 48, some change which is proposed in Finance Bill 23, and now I'm going to touch base another change recommendation in 49 GST Council meeting held yesterday. So interesting one. Listen very carefully. And I know, before I move, let me ask you one thing. You all are so much, connected with me, watching me throughout. So for me, it's a very interesting one. Please. Hers is saying network issue. Am I audible? My audio visual is clear to all? Hemans, so guy who is saying he has to correct it. All right, not an issue. See, GST law, you please tell me, and honestly, you have to touch base and tell me. Reading the provision will not help unless we connect with a practical example. So Prasanna Kumar is saying, yes, problem is there. Sometimes distraction is there. So am I clear to all once again? So that no problem to anyone. Say yes. Don't write anything. Say yes. So that I get a feel of it that maximum of you are having no issue. Okay, yes. All right. Listen very carefully. GST, reading the provision, I don't think is the right way. Lot of you are practicing. I know lot many of you, those who are so connected with me. Reading provision will not work. You have to bring a holistic approach. Practically understanding the provision and connecting with the practical example is the real way forward for understanding GST. Do you agree with me? Say yes and no. Do you agree with me or not? Say yes and no. So that I get clarity. Okay. See, I'm not using any PowerPoint presentation, right? I've stopped using PowerPoint presentation. Why I stopped, I really want to have connectivity with all of you. When we get connected, we are sitting virtual. I'm sitting alone, all alone here. You're sitting at your home with a cup of tea or coffee, with a paper pen with you. But when you connect the issue, it get registered to our mind, right? That is the way of good learning for all of us. And I always try my best. Let me tell you, I always try. But my best, it comes out only when you support me. So I'm not taking full advantage. I'm not acknowledging myself. My presentation gets successful with your support, with your participation, with your connecting, and with your, so much of chatting with me in a chat box. This chat box sometimes looks like full, thoroughly full. That's so that you are just sabka saath, sabka vikas. So last one. So I'm connecting a lot many things together. In this change, 48 GST Council meeting, Finance Bill 23, then change recommended in 49 GST Council meeting. Listen very carefully. I'm a freight forwarder in India, freight forwarder, undertaking transportation of goods to a place outside India. So there are two transactions that I'm a freight forwarder and company is also in Delhi. Freight forwarder registered in Delhi and my client company is registered in Delhi. He has given me assignment that Bimal, we want to engage you for transportation of goods to a place outside India, Germany. But we both are in India, supplier and recipient. And we all know from 1st October 2022, this sunset clause of exemption is being withdrawn. Ocean freight 5%, air freight 18%. All right. When I go back to section 12, subsection 8 of IGST Act, they say, and before they say, let me take this example in a way so that you can understand. If supplier in Delhi and recipient is in Delhi and both are registered, quite obvious transaction would be intra-state, CGST and SGST, Delhi SGST. But because of place of supply provision under section 12, subsection 8 proviso, so wherever transportation of goods to a place outside India, then the place of supply would be destination of goods, which is Germany. Then the supplier has to charge IGST. So supplier is going to charge IGST for a client registered in Delhi, and he should watch how this client can take credit of IGST. So this was a big challenge. So initially, they say they will issue a circular number 184. They've issued the circular and they said that Bimal will continue to charge IGST and will make mention of State Code 96, and of which buyer can take credit. That is the circular is saying, circular number 184, dated 27 December 2022. A lot of drama goes on. I don't know, GST, yes, we are trying to simplify, but gets... now, Finance Bill 2023 is amending 12 subsection 8 of IGST Act, and they have omitted that proviso. That proviso, place of supply would be the destination of goods, which is Germany. They have omitted. By this deletion, now I need not charge IGST. I will charge CGST and Delhi SGST. Say yes and no in a chat box. Say yes and no in a chat box, so that you get a clarity. And client will get credit. Client will get credit now. So he will not have any challenge, which he was having challenge when I was charging IGST as a supplier. So, so this is the change which has come in Finance Bill 2023. But what is the important change? Yesterday I saw in recommendation 49 GST Council meeting. They are going to delete section 13, subsection 9 of IGST Act. And 13, subsection 9 is applicable when either supplier or recipient is outside India. And it is place of supply for transportation of goods except mail or courier. That is what the provision which is coming out. And now they are saying this deletion will help, and it will go to by default provision section 13 subsection 2 of IGST Act. To my mind, it is another interesting and important change. Now 13.9 will not be there, and I'm going to determine my place of supply as per 13 subsection 2. If it is B2B supply, so supplier in India and buyer recipient is outside India, export. Unless all other condition of Section 2 and Subsection 6 of IGST Act are being made. So this is the 49 GST Council meeting recommendation. So these are the changes, whole changes, decoding made in Finance Bill 2023, but I did discuss reference of last year budget. I did discuss with the provision that what is provision existing as on date. So GST changes through. So I will take now 10 minutes more for personal income tax. Personal income tax. And first time you're going to listen to me on personal income tax, I think. I'm starting now. I will make many videos now on income tax as well. So you will get a lot more clarity even on income tax. I will try my best. And as I said, I will try my best as possible only when you keep me loving, giving your support, always connected, blessing for me at all time. I really need your love, affection, and blessing. That's what I'm always looking for. So shall I start with income tax? Shall I start with income tax? Say yes, personal income tax, and maximum 10 minutes, maximum 10 minutes, so that we can finish off. You can go take your good lunch today and enjoy with your family, kids all around. Even I'm also occupied. Let me tell you, I'm traveling to Dubai tomorrow morning. And this is another international exchange summit. I'm going to make presentation on e-invoicing. E-invoicing implementation in India at international forum where a lot of foreign participants are coming in from different countries. My presentation going to be on 22nd February at Dubai at International Exchange Summit. So these achievements which I'm getting, let me tell you and compliment, it is all because of you. Sunday, so much of commitment with the family, but still you're taking out your time, coming and joining. Those who are going to watch this webinar later, to them I'm telling you. And this appreciation goes to those who are taking out this Sunday and still listening. And I'm also trying that you should really get worth of devoting your time. I'm sure you are getting all worth, all pricing. Am I right? Pricing of your joining today. So let's start with the personal income tax. Okay, thank you. So Mukesh ji, it can't be. 74 and 122 cannot be applied simultaneously. Listen carefully now. There was old regime of income tax for personal income taxation. I'm going to touch base only personal income tax. And we know the limit was 2.5 lakh to 5 lakh, 5%, 5 to 10, 20%, and above 10, 30%. There was rebate if your taxable income is up to 5 lakh rupees. Rebate under Section 87A. And you were getting a lot of deduction and exemption under old regime. And prominent one, ATC, like LIC, PPF, NSC, tuition fees, repayment of principal amount of housing loan, lot money, ATC, 1.5 lakh. You're getting Mediclaim ATD prominently for your medical insurance, your spouse, children. If senior citizen involved, 50,000. Preventive health check, 5,000 rupees. These were the deduction prominently you were getting under old income tax regime. New income tax regime was launched and made applicable from 2020, but there was no taker. Hardly 5 lakh taxpayer has opted for new tax regime. And Honorable Finance Minister wanted that they want to done away all deduction and exemption as per old income tax regime. And they wanted us more and more to join new income tax regime. So this year budget, whatever important changes they have made in personal income tax, it is only under new income tax regime. New income tax regime. So prior to budget, under new income tax regime, 2.5 lakh to 5 lakh, 5%, 5 to 7.5, 10%, and every 2.5 lakh it was 5% increasing, and above 15 lakh 15 income tax rate was 30%. This was the new income tax regime, and there was rebate also up to 5 lakh rupees, similar like old income tax regime under section 87A, up to 5 lakh rupees. Now, what is the change in new income tax regime? I'm going to discuss one by one so you can make a note of it. First, the threshold for the tax slab, which was starting from 2.5 lakh, now increased to 3 lakh rupees. First change. And slab is now changed. It is 3 to 6 lakh 5%, 6 to 9 lakh 10%, 9 to 12 lakh 15%, 12 to 15 is 20%, and above 15 lakh 30%. So slab is also changed now. So whatever the slab existing in new income tax regime, it's changed. And slab is starting from earlier 2.5 lakh, now it is 3 lakh. So this benefit number one. Second benefit, rebate, which was up to 5 lakh rupees, is now increased up to 7 lakh rupees. If your taxable income is up to 7 lakh, then rebate, ultimately no income tax, up to 7 lakh. This is only for the new income tax regime. I'm not discussing. There's no change in old tax regime. It is all change in new income tax regime, 7 lakh rupees. In this given situation, this question is coming prominently, that what happen if my income is 7 lakh 1,000 rupees? Whether I will get any benefit? Sir, no. If your income exceeds above 7 lakh rupees, then you are liable for income tax as per the slab discussed, 3 to 6, 5%, 6 to 9, 10%, like that. Please tell me in a chat box, this part is clear? Please tell me in the chat box, this part is clear. Say yes, that this part is clear. Okay, this part is clear. Third change. Of course, Himanshu, we should be on same page. So up to 7. Now, Abhay Chopra is saying 7.5 lakh nahi hai kya? Including 50. Oh, abhi मैं आता हूँ बच्चा. मैं आता हूँ. बिल्कुल आपने सही कहा. The taxable income is calculated through standard deduction for salaried employees, 50,000. 50,000. So correspondingly, you can, those are non-salaried, for that 7 lakh will come. So I'm clear to all of you. Like Abhay posted a query to me, I clarified standard deduction of 50,000, and that too irrespective of any limit. There was big confusion that standard deduction will be given only when your taxable income is more than 15.5 lakh. Big confusion in the market. See, standard deduction will be given to all salaried employee. Am I clear to all? Say yes. At least write down yes in a chat box. मुझे लगेगा आपको समझ में आ रहा है. Okay, okay. Clear? So standard deduction 50,000 rupees. Another change which is coming out, that leave encashment on retirement is now increased to 25 lakh rupees for a non-government salaried employee. Non-government. So what happened for a government employee? It was earlier exempted. So now this is extended for non-government employee. Leave encashment on retirement up to 50 lakh rupees. So Abhay Chopra is saying standard deduction is available. Of course, it was earlier available under old regime, now extended under new income tax regime. Chaliye, theek hai. Pakka. Clear? This part is clear. Surcharge, which is 37%, if your taxable income is more than 5 crore rupees, is now reduced to 25%. And thereby effective income tax rate, which was 42.76%, is now reduced to 39%. So that is the advantage in the hands of high net worth individual. Am I clear to this aspect? Say yes in a chat box that this part is again clear. Please tell me. It's 25 lakh rupees. Okay. So there was some guy, leave encashment on retirement. He was post inquiry. So I said 25 lakh rupees. Am I clear to this? Now, new income tax regime is a default regime. But you'd be having option to opt for old regime. You would be having option. Now here, two things I want to discuss with a pause so that you can understand clearly. If you are having a business and profession income, from new you can really go for old. That is only once in lifetime. But if you're a salaried employee and you want to make comparison of benefit which you can determine between old versus new, then you would be having this question in your mind, sir, is it possible if I'm a salaried employee, maybe this year I opted new, next year old, again new. Is it doable? Can I do that? Please tell me, can I do that? For salaried, it is really workable. It can be workable. But for business and profession, this change would be only once in a lifetime. Am I clear to all? This aspect is clear to all? Clear to all? Perfect. So you all got it. Perfect. So I've also made everything clear. Now this question is coming, sir, what is the way forward? Old versus new. To me looks like old regime is for the time being, maybe 1 year or 2 year. 24 is the general election. And then a full year budget going to be presented by the new government elected. Then to my mind, government is intending and wanted us to go for new income tax regime. There's nothing like 80C in new income tax regime. Then this question was there in the trade that what happened for 80C, we were investing in LIC, getting social security, something safeguard for us. The two school, one school is saying that 80C is not there under new income tax regime. This money comes back to you. You invest wherever you want. You enjoy wherever you want. This money is being given to you. And then the school was saying, no, with this investment, we were getting income tax benefit. So we were investing. So it is being stated now that income tax benefit should not be calculated on the basis of such criteria. So it is to school available. This money is being given freely in our hand. And that is what the calculation source looks like. Just look at up to 5 lakh under old tax regime rebate, 1.5 lakh 80C, 50,000 at most 80D, 7 lakh up to 7 lakh new income tax regime rebate. No income tax. It made par unless you get other benefit and deduction. I'm not saying other deduction and benefit, which you can compare, definitely. But this is how given free hand. And they're always to school talking about on those pointers. Yes, housing loan, I agree. Mr. Santi Venkataraman, I'm not saying that. So you can always calculate those benefit and opt for, but way forward, government intending that they want all of us to go for a new income tax regime. That was the only summation. So from personal income tax perspective, whatever important changes I've done, but of course with Joho books, GST will definitely continue. We will bring in new charm of income tax, learning income tax in a different way, like we learn GST with all of us together. So I tried my best in GST, will continue to do in income tax as well. So 12:30, we have extended our time. We want to take certain questions also. So allow me to take question answer, but before I sum up today, and invite Harsani to start question answer session. You have to give me two. I need to ask only two pointers to all of you. 1.5 hours, full dedicated. Even I was thinking to take a sip of water, but I was so mesmerized that you all are so connected with me. First of all, let me extend my heartfelt thanks to all of you that you joined today, Sunday, taken out your time and joined this webinar. And I have tried my best decoding all GST changes. Even I've taken personal income tax for 10 minutes. I have given clarity, whatever. This video is again available on my YouTube channel. So I tried my best. So hope you have enjoyed all. Hope you liked it, and it was really best Sunday brunch in the first half. So enjoy your food today and stay blessed. Keep calm and composed. Wish each one of you a lot of happiness, joy, prosperity, everything to each one of you. So with this, let me with folded hand from core of my heart, thank you very much to each one of you. Let's connect it and be part of this journey together with Joho Books. And thanking, of course, Joho Books and Harsini for doing it on Sunday, because the first time we are doing on Sunday. So thank you, thank you, thank you very much. Harsini, back to you.
Thank you so much, Bimal ji, for this very lovely webinar. I think the audience had a gist of more than what we had mentioned in the session highlights. So you had covered a lot more topics for them. I think they're very happy about that as well. Now let's take questions. If you have any questions that you want Bimal ji to answer, please post it in the questions tab so that I can project it and Bimal ji can take them up from there. So we have Mr. Sunil, and I'm going to project the question on the screen. He says, Sir, client is doing labor work without material for construction of a hospital, and the owner is not registered in GST and provides the material. My client is invoicing only for his labor work plus 18%. Any violation of validation rules?
See, if client is providing material, Sunil, I am going to suggest you one better tax planning. If this is not your liability as a supplier is not liable, you are not liable for the material, and which is incurred by the recipient, then this is not going to be included in the valuation, like 50 and 100 crore, which I discussed. So in your case, if it is not your liability being supplier and incurred by the recipient and recipient providing F4C, then no violation of valuation rule. Hope I'm clear, Sunil, to you. So this is the answer to you. Along with you, I'm answering to other participants as well. Thank you. Next.
Let's go to the next question. So there are two parts to this question. This is from Mr. Abhishek. Abhishek asks, Mr. A was having...
Just project.
Yeah, Bimalji, I've projected it now. Can you see?
No, I can't.
Okay, 1 second. Let me project it again. Not sure. I actually projected it.
I have mistakenly, crossed.
Okay.
Mistakenly crossed.
1 second.
Okay, now it's coming.
Now can you see, Bimalji?
Yeah.
Okay. Mr. A was having transitional ITC. However, due to some technical issue, Tran 1 form was not getting filed. So claimed it under all other ITC in GSTR 3B. Tran 1 could be filed in October 2017. So posting credits twice in ECL. And
now in this case, Abhishek, my suggestion to you would be, I know that with the Philco Trade Center, the special window is being opened from 1st October 2022, 30th November 2022. If you have already availed in 3B, but Tran 1 was not processed, even some of my client also happened like that Tran 1 could not be processed or could not be filed. Such aggrieved taxpayer are being allowed with open window. What I suggested to them, and my answer to all of you would be, if you have availed the credit in 3B earlier, then you should have, I don't know whether you did it or not, but you should have done, and that is what the suggestion I gave to my client, that you should have intimated to the authority that you have availed such credit in 3B, even though Tran 1 was not processed for either or region. My sum of client was under litigation, So we have also cited such judgment in favor of my client. Now, again, we have filed this Tran 1 when this special window was open. I know that after this processing, this credit is again going to be reflected in ECL. Then what we have said to the authority, as and when this gets credited, we will reverse the same, because we have already availed the credit in 3B of my past period. This Tran 1 is being submitted for your checking and verification purpose, so that tomorrow you should not come back and say that you did not check and verify. So to safeguard from that checking and verification, we did follow this process, and that is how we have suggested to our client. So if it is coming twice, but you need to reverse that credit and intimate to the authority that so and so part you did in 3B, and that is how you have done your transaction. That would be right approach, Abhishek. Hope I'm clear to you. Abhishek, can you say? Okay. No, coming on mic will not be possible. Not possible. Coming on mic, not possible. But I have tried my best. That this is the answer I can give it to you. Okay. Next speech.
Next, we have one question from Suparas Jain, and he asks, kindly explain difference between high C sale and sale of customs bonded warehouse.
So, Paras, when let's say I'm importing goods, and when my goods is on high seas before entering custom frontier of India, and I'm selling such goods to some other customer, then that is called high seas sale. So there would be sales revenue in my PL account, that is coming on the credit side of PL account. That is the high seas sale. The person who has bought these goods, he is going to file bill of entry for home consumption. So he will pay basic custom duty, including IGST. I need not require to do anything. Custom bonded, I've imported the goods and I've stored in custom bonded warehouse by filing inbound bill of entry. It is not for the home clearance. And when my goods are stored in custom bonded warehouse, I sold to B, and it is within custom bonded warehouse. So in my hand, when I'm selling it and getting revenue, it is not chargeable to GST, being Schedule 3 transaction. That is the difference between high seas sale and custom bonded warehouse. So Paras Jain, hope I'm clear to you.
Next is this question from Suryam. He asks, sir, in some cases where investigation is going on, department is forcing to cough the tax where interpretation issues lies by threatening the arrest provisions. Can department proceed to arrest without demand determined?
Suryam, the problem is that from AP High Court, Tejas Reddy case, which is upheld by Honorable Supreme Court, they have said even before demand determination, arrest can be made. But they should prove proper reason to believe. Your question was whether without determination can arrest be done, and that is how that Tejas Reddy case of AP High Court upheld by Honorable Supreme Court. So provision existing today. And more interestingly, Suryam, for you, I'm asking, and this is a big worry in my mind, whether there would be two parallel proceedings can be initiated at one place, GST recovery, GST collection, another the arrest provision of 132. If you read 74 explanation, they are not including 132. So both activity can simultaneously run on against a taxpayer. So big threat and worry for us and for as a taxpayer. So problem and challenging, Suryam, and that is how things are evolving. So we have to see case by case. That would be my answer to you, Suryam.
And there's one question from Mr. Rakesh. Rakesh is asking, sir, can you explain section 13, subsection 8 with example?
See, section Rakesh, you are asking 13.8. 13.8 is intermediary. I don't know, you want to really understand intermediary? Rakesh, can you say in a chat box? Because 13.8 is intermediary, which I haven't discussed today. So it is, it will take time, Rakesh. Definitely it will take time. I really want to get excuse for that. please leave it to me. But my video is available, Rakesh. You can go to my YouTube channel and watch on intermediary. There are a lot of videos which I uploaded, and I did discuss all those components. You can go to my YouTube channel and watch. Because of time pause, I'm excusing today. Don't take it otherwise.
Let's take the last question for the day. This is from Mr. Jitesh. Jitesh is asking, when interest liability incurred in case of ITC reversed, Rule 42, we reversed ITC in the month of September of next financial year. Interest liability incurred or not?
See that reversal, the provisional versus final. And for final, this time period is there to my mind. September or June, I'm not recalling as yet, but I don't know. It's like that provisional credit need to be checked with the final credit reversal, and that need to be reversed by the specified time period for the Rule 42. If it is reversed, then no interest is leviable. That would be answer, Jitesh. Hope I'm clear. Jitesh, are you there in the chat box? Say yes, at least you understood my point which I said to you. Jitesh? There's one Santi Venkatraman Hasini.
Yeah.
See or he, I don't know, wanted me to take his or her question. If you can just, take her question.
Yeah,
if
sure,
possible.
Bimalji. 1 second.
Yeah.
Shant, yeah, I got it here. Okay, 1 second. I too have a query relating to intangible asset, sale of service from holding company to its subsidiary company. Is GST payable by High Court holding company and credit available with a subsidiary company? If yes, how long will the credit be available with subsidiary company?
See, when you do the transaction between holding company and subsidiary company, and they are separately registered. Santi, listen very carefully. Holding company and subsidiary company doing the transaction, and they are separately registered. Please. Now, in such cases, if GST is being levied and GST leviable also for supply of services, unless it is being excluded because being exempted or non-taxable, those factors I'm not discussing here. I am assuming it is taxable and GST paid, credit is available to you. And in all such cases, when you're referring to that, credit would be available to you. And that is what the provision has on date. And there's no bar per se. And that credit would be made applicable even for the transaction between related parties because of holding and subsidiary relationship. That second proviso and third proviso of section 16 subsection 2 will not be applicable. So without payment made, if payment is not made, reversal would be required. Such provision will not be applicable to me. Santi, hope I'm clear to you. Santi, have you got it? Okay, so there are a lot many questions. Tejas was also there throughout with me. Tejas' last question, he's asking something to me. I'm reading it out, Harsini, for him. And this is the last question of the day. Section 8 company registered for our sister concerned company activities providing education services to doctors. Our product introduces to another doctor for used items or orthopedic implants. Our company donate 50 lakhs to our new sister company for education purpose like booked hotel, travel, air ticket booked on behalf of doctor. Whether liable to GST. Tejas, you're asking such question which is really a technical one and a really opinion work. Opinion work. See, when you say that these two companies are separate, let's assume separate. I'm just giving prima facie answer. So we have to check case by case with the factual position. If two companies are separate register and they are not related, if they are not related, then schedule 1 will not come into the picture. So first of all, you have to check those parameters that it is out of schedule 1 transaction. If it is out of schedule 1 transaction, then I will go back to section 7 subsection 1 clause A. Then there has to be consideration. Then only GST leviable. And without consideration, schedule 1, if I've excluded myself from schedule 1, then there has to be consideration. Now, something which I'm donating and there's no quid pro quo. If there's no quid pro quo, I will say there's no consideration, hence not falling within the definition of supply, no GST leviable. So two parameters are given to you, Tejas. This is what you have to keep to your mind and you have to work out from your, factual position. Hope I'm clear, Tejas. Say in a chat box that little clarity you got, and that on that basis you will look at the transaction. Tejas? Tejas, are you there? We are awaiting for your comment. You're so fast, so I really need your answer. So he's, I don't know whether he's there or not. I'm not getting any. All right, so I hope you got my point, Tejas. I tried to give you the clarity on those two parameters. You need to work it out. All right, so with this, Harshini, back to you, and thanking once again to each one of you for joining today's webinar. Keep loving and passing on your blessing to us, and take care of yourself. Stay blessed. God bless all of us together. Harshini, back to you for concluding today.
Thank you so much, Bimal ji, for taking this Sunday out. Actually, Bimal ji is completely packed this month. So he took the Sunday out so that he can do the webinar for all of you. Like he said, he's also traveling to Dubai and he has a lot of tight schedule, but he made sure he's available for us on a weekend to make GST more easier for all of us. So I think thank you so much, Bimal ji, for that. And your love for Bimal ji keeps continuing, and I can see a lot of questions coming in. He's always active on a social media platform. If you have any questions, please feel free to post it on LinkedIn or Twitter or YouTube. And thank you all for joining this weekend. We have a lot more collaborative webinars coming up with Bimal ji. We hope you all continue to stay with us and also keep GST, learning much more interesting and easier. Thank you, everybody. Thank you, Bimal ji.
Thank you.